Good afternoon. This is Mac with PriceActionTradingSystem.com, and this is Wednesday afternoon, January the 4th, I do believe. And I just want to do a quick, it's been a hectic day for me, so I don't have a lot of time today, so I'm going to do a real quick chart study. And just to give you a look at my chart to show you what I was looking at the open today, we had a trend that started into yesterday afternoon. You can see I drew that trend line down through there. We did get a break of it right here with this double top. And then you can see it did follow our trend line rules. There's one leg down, then a correction, and then a second leg down. And the second leg didn't quite reach the other one, but that's close enough to call it a hit. Two legs down, and really what should have alerted you to the second leg down being over is if you drew your trend channel line. You can see all I did was take this upper line and copy it and put it on the lower side of the price action. You can see every time we got down there it held, and then prices bounced. And generally what they do is they go to the other side and then they come off the other side. And you can see tried to bounce here, went a little bit lower, and eventually we broke lower right here. Once you get a failed break, kind of like we do here, you generally get a rally. And you can see what happened. We rallied, but that was after two legs down. Most of your smarter traders probably realized this was a low for the day, and they started buying. It wasn't really clear right in here. We'll talk about that in a minute. And we rallied pretty much on into the day. We really rallied up to about lunchtime, and then we went into this trading range. This trend line did continue to hold through the day. You can see we had a couple of chances to buy off that trend line. And what you should have done is copied that trend line and moved it up to the top side of price action. And you would have known to look for a high right in this area. And even if you drew it like this, you probably could have drawn it like that just as well. And you could have seen the overshoot right there. And then, of course, we came back down, tested the line. We tested it again. So I always try to draw these trend channel lines. This is probably more like it right here. Sometimes they don't give you as clear a picture, and this one didn't because we did overshoot it right here. But I feel pretty sure that's probably your channel right there. And you probably would have drawn it just like that right there. And you can see it held here. We did overshoot it right here. The market kind of got strong right here. They hit some stops when they broke above here, but it just couldn't muster anything up, and then it pulled back, and then it touched it again there. So that's probably your channel with just an overshoot right here. But anyway, let's go back over here and talk about the first real setup. This was really a trading range, and you could have gone long right here on this trade, but this was before the market opened. That was probably the best setup of the morning. And you could have, if you were trading earlier, this was a great setup to go long. And this was a good setup right at the open. It's a second entry short, and I forgot to circle that one. But this was your first real decent trade. And it was a second entry short. It was also a triple top across here, a double top. So a lot of reasons to be thinking short. And again, you're probably thinking if it comes down here and you're thinking exit down here near this trend channel line and near this double bottom, and you see what happened. It did bounce right there. There weren't really any more good setups in here. It was obvious this was a training range by the time we touched this bottom and bounced again. You should have probably had your line in right here, and that would have alerted you to this setup as well as the trend line right here. This was a great setup. But as you can see, we pretty much were in we pretty much were in a trading range from about, I'd say the trading range really started right here from about 7 o'clock to about 9 o'clock, and then we broke lower and then bounced higher. But you got a great setup short right here. And again, I'll tell you why. It's a second entry short. Here's your low, first entry, second entry, and that was a nice, easy scalp. And if you'd have been alert to the trend, the double bottom and the trend channel line being down here, you probably should have exited. Even if it broke lower, it's probably just going to trap people and climb back up. This setup was not very good. There were too many overlapping bars by this time, and you can see it's just the range is getting tighter and everything's right in the middle of the big trading range. So we only want to enter at the lows or at the highs. And then, so this was really the best setup of the morning besides this one. This was a key entry point. It's at the trend line. These breaks up here were, you know, enough to, when we touched that line to the tick and couldn't go lower, that was a really good sign. That's a nice reversal bar with a one tick trap out this top. Plus we had this triple top across here, so it's a failed break higher. So there's a couple reasons to be thinking short. Your entry would have been one tick below this bar, and that would have been at 1269, it looks like. And you can see that was a nice ride down. Any runners would have survived here and been worth as many as 60, even if you exited right in here, it was 64. That's about a 5-point move. So a nice 5 points right out of the gate this morning. You could have entered here. I don't recommend this was much, but we did have the trap. Let me get this. I know a lot of you don't like the crosshairs. They tend to get in the way. Let me make this a little bit bigger here so it's easier to see. But you can see we had a trap here. Prices actually broke higher right here first before they broke lower. I didn't take this trade. I looked at it and I wanted to take it, and I did not. But this is good enough to be a breakout pullback short, and you do have a one tick trap on a failed second entry. Here's your new high. Your first entry was right here, and here was your second entry long. So that was a failed second entry long coming off this support area. So I'm sure a lot of longs got trapped there, and that pushed, when they started hitting those stops, that pushed it on down to the lower side of the trend line again. But another clue was this bounce off the trend line. So the trend line was still in play. So we're likely going to go to the other side of the trend line, which is going to be down here somewhere at this point before we're going to go higher. And you can see that's exactly what happened, because generally what we do is we go from one side of the trend channel line to the other, and you can see that happening. And sometimes the trend was down, so you didn't want to be thinking long down in here until you got a really good pattern. This one looked good, and this probably trapped some people, but what you can see is it wasn't a good strong bar. Even though there's some green in there, there's stem on the top, stem on the bottom, and then by the time this one set up, more stem. So prices just weren't really ready to bounce yet. And this was another good short. This is a two-legged pullback to the EMA. This one's harder to see, but if you went to a smaller chart, you'd clearly see two legs back. Here's your first leg. There's your pullback. There's your second leg. And then that's your second entry short. I would have waited on this red bar. Going short below this doji here would have been questionable on this particular setup. This is also a double triple top across here, so it's a failed break higher. But this is pretty much just a two-legged pullback to the EMA in a trending market, and that's our number one top entry that we like to take. So the best entry would have been right below that bar, and your runners would not have survived this one more than a couple of points, because this did pull back, and that would have taken out your runner. But if you kept it at break even, you probably would have survived, and you could have got a couple of points out of those runners. But this is where I would have been looking to exit. Look, we finally broke through the trend channel line. We got back above it, came back and tested it. This is pretty much a double bottom pullback long, and you could have gone long just above this bar. It would have been better to wait on this bar because a break above it's showing additional strength, because this is a pretty bullish bar. It opened on its low, closed almost on its high. On some of your chart, it may have closed on its high, and then you can see it was pretty much straight up right there until we got to the other side of the channel, and that's what we were looking for. So this was a good long here. If you saw this and took it, that was a pretty good setup. I didn't mark it because it would have been counter trend trading, and I don't usually teach that because too many people lose money counter trend trading. But there are good counter trend trades once you learn how to read price action, and that right there is one of them. Now, people are always asking me about where you might get fooled and where you might get trapped, and so I want to talk about this area right in here. I got it circled. I want to remove this circle, and we'll talk about this today, and then I want to wrap this up. This is pretty much a trading range, but what you can see here, I'm going to show you what you need to try to avoid. It's very possible that you got trapped short right here. I wanted to take that short right there. I talked myself out of it, and I'm glad I did, but I wanted to go short right there. And the reason being is we had all these overlapping bars. We had the failed break higher. We couldn't get above the trend line. We set up with a nice little bearish inside bar here, small one near the high. And what you would expect out of that is you'll be able to, prices will probably at least come back and test the bottom. And you can see that's exactly what happened, but they couldn't break lower. They were protecting this low, and you see they came back and tried it again. So if you did get trapped right here, the smart play would have been when it came back down and started bouncing again right here, I would have just exited. Take a tick or 2 ticks or whatever you could get out of it. And because when prices broke higher here, that hit a lot of stops, and you can see it was a nice ride up right there. And this was actually a pretty good short area right in here if you could get short up here near this top. But after this leg up right here, we're looking for pretty much a measured leg, and let's just see how close that would have been. There's your first leg. Here's your pullback, this little hesitation, and look, there's your second leg. And we did overshoot it a bit, but you can see that's pretty much where prices got to, and then they backed off again. So, and you actually could have had a little temporary short-term trend line kind of up through here, but this was your main trend line is usually off your first 2 swings. So this is going to be your your main trend line down here. And the way this might be, and this might be why we had a little bit of trouble getting in a minute ago, it may have been more like that. And then if you copy that, let's drag that up there and see what we get. And yeah, that fits much better than what I had before. So that's probably more like it. But that shows you don't have to get your trend lines right. If you get them close, you're generally going to get there. And you can see that's where prices are bouncing right now. And we started the new day with this line right here. And what we did, we worked our way to the high side of this, and then we worked over. And that's what happens when the market's generally strong. Instead of pulling straight back, it'll kind of work sideways and catch the trend line and then shoot higher. So it wouldn't surprise me if we don't go higher here. But anyway, hopefully that all makes sense to you, and it kind of shows you. But again, if you did get trapped right here, if you went short right here, when this ended as a doji, instead of going lower and it bounced right there, that's when I'm thinking get out as fast as you can. And you might have put your stop 1 tick above that, so you might have lost a tick there, or maybe 2 ticks, but still you don't get hurt that way. But when that ended as a doji, that's not a good sign. That indicates, especially when it bounced off this area right here, made a double bottom. And when it came down here the second time, by the time it got down here the second time, you could see there were 1, 2, 3, 4, 5, and you really could count these 6, 7, 8, or 9 overlapping bars. That's where you don't want to get caught. So when you get caught in that, just at the first opportunity you get, take your money and get out, and then look for something, look for another opportunity. And that would have come very shortly on this failed second entry short here that reversed, and anytime. And so that's a trap. That's a nice short trap, and going long right here would have been fine. You probably would have been better to wait for this bar. This is scary right here, going long in this stuff, but when you got a trap like that with 2 tries to go lower that both failed, odds are this prices are going higher, even at least enough for a scalp. And you can see that was a pretty bullish move up through there. And so hopefully that helps you to see what if you do get trapped in this stuff, as soon as you can get out. And what you're probably is going on in your mind, you're thinking, as soon as I get out, these prices are going to drop and come straight down here, and I'm going to miss out on a great trade. Well, if they're hanging up like this, it's not worth the risk. Just take what you can get, or take a small hit as you can, and make it up on the next trade, which would have come right here. You could have made that up easily. Entry right here would have been probably around 67, and this ran. Your runners would have survived here if you held on to them, and they ran all the way to 71. So easy chance to make your money back plus a lot more. Even if you just scalped out at 2 or 3 points, there was enough room to get all your money back plus some. So don't risk it. Once you see that prices are starting to congest, I normally exit. first chance I get out, and sometimes I get out and watch prices just run like a rocket down here, and I'm thinking, man, I sure messed up there. But what's going to happen more times than not is you're going to get stopped out, and then prices are going to go down there, or they may not go down there at all. So just take your money, don't be greedy, and watch for that congestion. So people have asked me a lot about congestion lately, so I wanted to talk about that. But I'm going to wrap it up. This is already about 15 minutes longer than I wanted it to be. I got a lot going on today, but this is Mac with PriceActionTradingSystem.com. If you got any questions on today's lesson, drop me a note. I'll try to answer it. Thanks, and we will see you next time.